So I think the unofficial title of this panel is People Who Get Quoted by the Press When Someone Has to Write a Story About Bitcoin and They Don't Know What the Hell They're Writing About. That's our theme up here today. But I think we're also going to talk about whether or not you can use your Bitcoin at Walmart someday. So let's go ahead and get started. Just very briefly, I think you have short bios up there, but we have on the stage with us Jim Harper, who is the Director of Information Policy Studies at Cato. We have Constance Choi, who left her career at Kirkland & Ellis to join Payward Inc., which is the company behind Kraken.com. And her bio always says that she left this good job to go to this crazy job, which I think is, captures the spirit of the thing a little bit. Jerry Brito, who is a Senior Research Fellow at the Mercatus Center at George Mason University. And Barry Silbert, who is the founder of the Bitcoin Investment Trust and the founder and CEO of Second Market Inc. You may also recognize a variety of these people from such venues as hearings about Bitcoin. So if you don't get your fill here today, just Google them and the word hearing, and you can get infinite sober testimony where they're all trying to be Bitcoin is totally not weird, guys. It's fine. So why don't you kick us off with a little of your expertise? Sure. What is Bitcoin?
Well, I wanted to start off by spending a little bit more time on what Bitcoin is for folks who might have come here, and I'd guess nobody has to raise their hand, but 30 to 40% of the people who came here this morning or early this afternoon may have felt like they came into the middle of a conversation, and that the conversation was about negative interest rates. That's not what the Bitcoin conversation is. The genius of Bitcoin is really that it's a universal public ledger. It's a way that parties dispersed across the globe can add something to a ledger with cryptographic proofs that it's there, and it's fantastic. It solves a problem called the Byzantine generals problem, which is a little too Byzantine to go into, but it's the problem of confirming a truth across time and distance without relying on some central authority. That's what's important, I think, technologically about Bitcoin. Obviously, the cryptography is incredible stuff that's very important to protect. But what it allows to be done is adding entries to the ledger that are valuable to have, because the Bitcoin protocol only allows a certain amount of Bitcoin, which is essentially sort of the right to control a script or a little bit of code. There's a limited amount of it. So it has value to control an entry in the ledger, to transfer something from Jim to Jerry. He gets something of value because he then has something that others might value. Perhaps the killer app for this public ledger is transfer of value, is money essentially. And I'm sort of indifferent as to whether Bitcoin ends up being a store of value or a unit of account or a payment system. It might be some of those things in different parts of the world for different people. It might serve all those purposes for some people and only one or two of them for others. But I think it's worth just sort of considering Bitcoin in its money application compared to other forms of money. And that's one of the early things I wrote about Bitcoin, which I guess attracted a lot of attention and got me quoted by a lot of people who want a quick thing said about it. Is a piece I wrote called "What is the Value of Bitcoin?" It was during one of the earlier spikes. I think it was the second one after the Brito bounce, which Jerry, I think, caused by writing about Bitcoin in Time. Might have been the second spike in price. I said, what's the value of Bitcoin? And basically went through a comparison of Bitcoin to other kinds of money. It has, like any good or service, there are dimensions to it that make it better in some respects and not as good in others. One is the question of value or intrinsic value. And a lot of people, I think, who are just getting started think, well, Bitcoin, that's just evanescent code. It can't possibly have value or intrinsic value. I rely on rectangles of paper. So what has intrinsic value and what doesn't? I'll demonstrate how value works, which is essentially subjective. This is probably worth about 80 cents or 75 cents, and if I put it in a store, it would sell for that much. This is worth just about nothing, because if I put it in a store, it wouldn't sell because it's already been opened. Each of you subjectively decided that this is not a thing I would buy in the store anymore, just because I changed slightly the form factor. So there's not really an intrinsic value. It depends on what other people are willing to pay for it. So that's essentially a wash between fiat currencies and Bitcoin. As far as transferability, Bitcoin has the edge on fiat currency, because even the best implementation for transferability of fiat currency, PayPal, only goes to the countries that PayPal serves. Bitcoin goes wherever the internet goes, provided somebody has a good enough connection and technology to use a Bitcoin wallet or client. Acceptance is where Bitcoin is weaker, quite obviously, than fiat currencies today, because very few people, despite Kashmir Hill's efforts, very few people are using Bitcoin. Once Bitcoin is more widely adopted, should it become more widely adopted, it will achieve parity and maybe superiority to fiat currencies, because it's a worldwide protocol. You don't have to change your dollars into euros. If you go to Europe, you can use Bitcoin everywhere. The cost of transfer is quite a bit lower, I think, for Bitcoin on average. In my early writing, I talked about it as being free. It won't be free. A lot of Bitcoin transfers are free, but it won't be free ultimately, but lower cost. Bitcoin is inflation resistant because it has that protocol quality of topping out at 21 million units in existence ever. That's not defined by the fact of a decentralized currency. There can be other currencies that may have a natural inflation rate. And in fact, you could have multiple competing currencies. You might use Bitcoin for one purpose, and then if you want to use it for a different purpose, go into a different currency that might have a natural inflation rate, and that would be fine. Bitcoin is deflation prone because it's probably more than fiat currency is likely to see people holding it because they believe it will increase in value in the future. I don't generally see deflation as a likely problem. I can't see how savings is actually truly bad. Deflation is bad for fiat currencies because those are all wildly inflated at this point, and so the deflation would be quite painful. A couple of dimensions, and I'll try to wrap up quickly because I know we have a lot to talk about, that people haven't thought much about is whether or not Bitcoin is surveillance resistant. So the money systems you use today are, by and large, also surveillance systems. And that's for good and bad, right? A centralized provider of money transfer has to know where the money came from and where it went in order to administer the service. But often, because of national laws, they also have to turn over that information to their governments. And I wouldn't be surprised at all if the National Security Agency in the United States was gathering as much data about financial transfers from financial services providers as they are about communications from telecommunications providers. The third-party doctrine, after all, got its start with financial services in the Bank Secrecy Act. So there's some surveillance resistance, or at least potential, with Bitcoin, although it is a pseudonymous protocol that would allow to re-identify transactions quite readily if the veil of anonymity is pierced. Finally, Bitcoin may have better prospects in terms of resistance to seizure. It's easier to move, as the M-Pesa example illustrates, it's easier to move and probably safer to move from the market back to the village than it is to carry large amounts of cash. We also saw in Cyprus where the government decided to seize assets that were held in banks, and Bitcoin is, because it can be moved away from those kinds of institutions, it might be seizure resistant. On the question of security and holding, I think Bitcoin is probably in a bad way compared to fiat currencies, but it'll improve over time. It's not inherent to Bitcoin that it's hard to hold securely. It's a computer science problem. Most people don't know how to securely hold their Bitcoin. They're going to rely on service providers, some of which are unreliable, and so there are going to be security problems around Bitcoin. My very first purchase of Bitcoin, as a matter of fact, was on an exchange called Bitcoin 7. I think I got in at $10. Retrospect shows that I was a genius, except for the fact that the Bitcoin 7 exchange was hacked and all the Bitcoin went away. So there's a security problem that will be solved over time. It's not inherent to Bitcoin. Those are the major dimensions I've been able to think about of money, and a brief assessment of how it ranks and how Bitcoin ranks in comparison to fiat currencies. And time will tell what it's good for, what it's not good for. I think if you give me a long enough time horizon, absolutely it'll be used at Walmart.
All right, Jerry?
So I think the purpose of this panel is to sort of guess at what is the likelihood of acceptance or adoption for Bitcoin, or in fact any cryptocurrency. I think is a better way of thinking, is sort of broader than Bitcoin, although Bitcoin is the first and therefore has a first mover advantage. And so when you ask that question, well, what is the likelihood that Bitcoin will be accepted or adopted? I think what we're asking is about payments, right? What are the options? What's the probability to be able to use Bitcoin at Walmart to pay for goods that you're buying? And I think it's a great question. But what I want to point out is that payments is only the first application of Bitcoin. It's sort of the most obvious application and therefore the first application of Bitcoin. But Jim is right. What Bitcoin is at root is a distributed, decentralized public ledger. And so anything you can do with a ledger, you can do with Bitcoin or with a cryptocurrency like Bitcoin. Francois Velde, who is a economist at the Chicago Fed who wrote a primer on Bitcoin, has a great way of describing Bitcoin. He says that Bitcoin is a system for securely transferring Bitcoins among users. And so it's kind of sound circular, but it's not, right? The first Bitcoin in that sentence is capital B, right? The Bitcoin network system is a system for transferring securely and verifiably Bitcoins. Bitcoin's little case b, right? Lowercase b. Bitcoins are these tokens. And to date, these tokens have been used to represent money, right? So we say a Bitcoin is worth $600, and so what can I buy with that? And so we think about payments. But there's no reason why that token can't be used to represent a share of stock, or an ounce of gold, or a registration of a property. And you don't have to use the whole Bitcoin. You can use an incredibly tiny fraction of a Bitcoin as that token. And Bitcoin also, because it is on a computerized network with a protocol, is programmable, right? You can't have dollar bills with if-then statements, but you can with Bitcoin. So given all of that, Bitcoin really is a platform for innovation, for financial innovation, but for lots of other things. And so we don't know what we're going to be using it for. I can give you some examples just sort of to think, what can you do with a ledger that is verifiable? By the way, verifiable is very important. This is what it means. Until the invention of Bitcoin, there's no way for me to transfer a file to you. I could copy a file to you online, right? So I could attach a Word document to an email and send it to you, and now you'd have the Word document, but I would retain a perfect digital copy. There was no way for me, the way I can with the $100 bill, I give it to Jim, now he has it, now I don't, and we can verify that by just looking at our hands. There was no way of doing that online before the invention of Bitcoin, and Bitcoin allows that. It allows us to transfer those tokens, Bitcoins, between people in a way that's never been possible online before, cheaply. And so imagine, Bitcoin seems to be, who does it displace in payments? Well, most clearly something like Western Union or MoneyGram, right, which is a pure money transmitter. All they do is send money from A to B. Bitcoin can't do that, right? And so it disintermediates that money transmitter. But what is a stock exchange? It's essentially a ledger and a way to reconcile transfers of shares of stock. You can imagine Bitcoin disintermediating stock exchangers or commodities futures markets, right? Imagine with Bitcoin, we can make a transaction where you have three parties, three signatories, and 2 out of 3 have to sign for the transaction to go through. That's part of the programmable money aspect of Bitcoin. So let's say Jim thinks that the weather next week is going to be over 75. I think it's going to be below 75.
I do.
We can make a transaction with 2 out of 3 signatures, the third signature being Google's weather bot, just the ticker. And a week from now, so we both sort of wager 5 Bitcoin on that, or we could call it a contract, an event contract. And a week from today, whatever the weather is, that's who gets the Bitcoin. Voila, a decentralized predictions market, which is something that Justin Wolfers, I think, should like. And it's something that Intrade was trying to do and was not successful in doing it in a centralized fashion, but now Bitcoin allows you to do it in decentralized fashion. You can have smart property, you can have a lot of other things. So again, I'll stop there simply to point out that payments is only the first application of Bitcoin.
Constance?
Hi, so I'm going to just dial back to will this ever be used at Walmart from the perspective of an exchange? So I'm the general counsel of an exchange. We operate largely outside the United States because of the regulatory issues here. We are based in San Francisco. We would love to service U.S. customers, but we are engaging in the appropriate process to make sure that we have full regulatory clearance and clarity before we enter the United States. So, the FinCEN guidance came out last year, and it clarified, at least in the United States, the status of Bitcoin in the interim at the federal level. And it remained an open question as to how this was going to be treated by the states. So, after that guidance came out, a number of firms that had been operating in this space for quite some time, that had been engaged in these issues and been working on the ground to deal with some of the data security issues, and had been promoting this protocol, got together and realized a lot of us were actually serious businesses, and we have compliance programs in place. A lot of us understand that we're an emerging payments sector, and we're going to be under more regulatory scrutiny than most, and we have to do it better than banks. And unfortunately, that's sometimes not as hard as you might think it might be. So we realize we're serious businesses, but yet what you were hearing in the news was all of this talk about all this noise, about illicit activities, about anonymity, about a lot of misinformation going on about digital currencies. And we want to ensure that there was an evolving dialogue between decision makers, public and private stakeholders, and people who are deeply embedded in the technology, are building out this infrastructure, to ensure that there's communication between the technology builders and the policymakers, to ensure that regulations actually address how the technology works, not how they think it works or it may work. So we started this dialogue. We've been going around, just to give you a viewpoint. Last year we were going around to financial regulators around the globe, banks around the globe, and having to start from the very scratch, explaining what is digital currency, explaining the concept of money, really, a value transfer in our systems. And now we get inquiries daily from institutional investors, hedge funds, different merchant processors, NGOs, that have seen the ability, that they've seen that this protocol can solve many, many problems in the legacy system, whether that's privacy, whether that's cryptographically verified transactions without a central authority, whether that's being able to effectuate a payment without sending all sorts of information online, whether that's being able to reduce transaction costs to nearly zero. So, the level of education, the level of interest in the ecosystem has grown enormously in the last year. And, I think that it's correct to think that, 2014 is going to be a very, very big year for digital currencies. In terms of, in terms of the regulatory issues, it's the way that New York has been handling this and proceeding in a really thoughtful way, I think is exactly the right approach. And you're seeing kind of the reactionary actions outside of the United States because they simply don't understand the technology. So when you talk to a regulator and you talk to a bank and you can explain the real risks and opportunities, you can reach consensus. The problem is the misinformation. The problem is not having that dialogue. So I think a lot of the speakers here have already spoken to this, but Bitcoin really is a protocol. It's an algorithm that creates the central ledger. And if you think about how many uses of numbers we have in our society, from a serial number to a dollar bill to a transaction ID, to be able to cryptographically verify that without having to reach out to any third party has enormous useful properties in the system. So, one thing to keep in mind is that really we are where we were in the internet in the early 90s. And you can imagine, there was a very thoughtful comment in a closed-door meeting with a number of private and public stakeholders where somebody said, imagine capping the maximum speed on a motor vehicle to the maximum number of horses we could possibly imagine going forward. So I think it's important to know that that we are talking about different paradigms, and we need to really investigate what are the public policy goals for these rules, and are these rules actually effectuating these policy goals? And then if the structures around which we've created these rules has changed, now we're in a digital world rather than in a centralized world, then how can we achieve these policy goals in a better way in this environment? And so I think it's really important to approach that from a holistic perspective, and it's heartening to see that happening here and outside the United States. Now, the great the great opportunity posed by this technology. I mean, it's extraordinary that without any outside influencer, company, government, that this has been so rapidly adopted in the last 3 years. Without any outside external influence, people have seen the benefits from all diverse sectors, have seen the benefits of this technology and have jumped on board. So because this is so global, because this is so universal and transformative, and because it lives on the internet, I think jurisdictions and government stakeholders realize that this is here to stay, whether it's Bitcoin now, Bitcoin 2.0, decentralized transactions 3.0. They realize that this technology is here to stay. And so, right now we have the ability to be able to create, a balanced framework, because if you create too tight of controls, I think governments and regulators understand that, because this lives on the internet, it will reach their constituencies anyways. So, we really have an opportunity here to be able to, frankly, in different jurisdictions, they're competing to be able to create the right framework, to be able to promote innovation, and at the same time have the appropriate guardrails. So, a huge opportunity here, and I think that this will be a huge year.
So before I answer the question at hand, I have a question for the audience. I always ask this question when I speak. So this is time for some audience participation. On the spectrum of Bitcoin skeptic to believer, by a show of hands, who in the audience would associate yourself with the Bitcoin skeptic side of the spectrum? Put your hands up high. Looks maybe like a 25%. Okay, who's a Bitcoin believer? Who's like a rah-rah Bitcoin believer? Oh, we got a Bitcoin-friendly audience. Fantastic. Now, we probably should have done at the beginning of the day.
Is that not true at every Bitcoin conference?
I don't know. This day started off pretty negative on Bitcoin, and it's only gotten better. Okay, so to answer the question, will Walmart accept Bitcoin? The answer is yes. Obviously, it's yes. And so the reason why Walmart is going to accept Bitcoin is the question is no longer, why should you accept Bitcoin? The question is now, why should you not accept Bitcoin? I'm probably the most active angel investor in Bitcoin world, which I don't know if that's a good or bad thing, but I think it's a good thing for now. And I've invested in over 20 companies, and I'm an investor in BitPay and Coinbase, which are the two largest merchant processors. And I have pretty good visibility into the merchants that they are onboarding right now. And what I can tell you is they are in various stages of discussions or implementation with the who's who, online and offline. And some are experimenting, some are dabbling. But if you understand how those businesses work, basically they take on the FX exchange risk. So Coinbase or BitPay, if you choose to kind of use them for this, if you sell a good for $100 in Bitcoin, you get $100. Doesn't matter what the price does in the next 5 or 10 minutes. So if you can accept Bitcoin and have zero currency risk, and you can accept a payment that is dramatically less expensive than credit cards, and you can get some great publicity, as was mentioned before, why not accept it? And the reason why Walmart is probably not accepting it right now is one, they're probably fairly conservative. Two is, it wouldn't kind of move the needle. But three is the fundamental problem that exists is the monetary base is not large enough. You have a 7, 8, 10 billion, I've looked at the price in the past 10 minutes, could be 20 billion. Whatever the number is you have a monetary base that's not large enough to support a high volume of exchanging US dollars or otherwise in and out of Bitcoin. And so that's either going to change or it's not. And the way it's going to, I believe, change is going to be a dramatic increase in demand for Bitcoin as an asset class. I believe it's coming from Wall Street. I think we're 3-4 months away from seeing a lot of well-known, smart money and investors moving into Bitcoin. It's going to create more demands. You have limited supply. It'll result in a higher price. If we can get this exchange issue resolved, meaning credible, regulated, trustworthy exchanges launched, we will see a higher volume and velocity of exchanging. And then Bitcoin can actually fulfill the promise that everybody's excited about, which is Bitcoin as a payment mechanism, Bitcoin as a remittance business, Bitcoin as a money transfer network. But I don't think it's possible with the current size of Bitcoin as it exists today. But I also fundamentally believe it's about to change in a big way pretty soon.
I'm going to take a page out of your book and do a poll myself. Forgive me if this happened. I missed the first sessions. But who actually holds Bitcoin in the audience and on the stage? Who has some of their life worth in Bitcoin? Okay. How many of you have bought a thing with Bitcoin? Like a physical object? Okay, so this is, I mean, in some ways this already answers our question, or it certainly gets us a long way to the answer of the question, which is, although the Walmart example, Barry kind of outlined some specific things about it, the question is really, are you going to get to be able to buy the stuff with the Bitcoins? And of course, everyone has read the story, and in fact, I'm guilty of having rewritten the story of the $2 million Bitcoin pizza, or the $5 million Bitcoin pizza, or the $500,000 Bitcoin pizza, depending on when you wrote or read that story, which is supposedly the first thing purchased with Bitcoins, in which someone posted online and basically said, I'll give you Bitcoins if you send me a pizza. And lo and behold, capitalism. But I guess what I'd like to do before we go to questions from the audience, which we're going to do right now, is try to pit our panelists against each other, Thunderdome style. And by Thunderdome, I obviously mean sitting here politely and talking about it. Jerry, do you disagree with anything that Barry said?
No, not with anything Barry said.
Anything? Nothing.
Bring it on. Come on.
You can do it.
So I think it's not a disagreement, but maybe I can pose a question to him in a way. So, so you're saying that Coinbase, BitPay accept all the FX risk, but they've got a hedge against that in some way. And from what I understand right now, they're hedging in an algorithmic sort of fashion, trying to dump Bitcoin when it's not looking so bright. But that's not really sustainable. I imagine you're going to have to see some sort of derivatives market in Bitcoin in the future. And that doesn't seem to be happening anytime soon. So
Yeah, I mean, I wouldn't comment on kind of what they're doing behind the scenes to kind of mitigate risk. But I think it's fair to say that if Walmart was to sign up tomorrow and say, hey, we're now accepting Bitcoin, and $100 million came through in Bitcoin payments, they would not be able to handle it.
Right.
And obviously that's not going to happen. But I think your point is right, which is in order to help facilitate commerce and kind of to the levels we're talking about, you're going to have a whole new level of derivatives and hedging. And I know that's actually being worked on right now. There's a startup in New York that's working on a derivative exchange. But I do think what will probably happen first is we'll just have the deepening of the exchange market and higher volume and velocity, which would enable them, payment processors, if they choose to do so, just basically be able to sell. But fundamentally, most Bitcoin companies are actually long Bitcoin. So they don't necessarily need to go immediately sell when they do a process, a payment.
Jim, I know you disagree with something Constance said.
Well, I don't. But I want to talk about volatility.
Can I just say that I think that they separated out the panels to reduce all possible conflict.
That's possible, actually.
Yeah.
This was very warm and fuzzy.
Can I please speak to the first panel right now? I don't
You have to
even
buy
know
them
what
pizza
negative
afterward,
interest rates
if you
are. But the volatility issue is a perennial, and it's a perennial weed because the thing that matters is the protocol and how it works. And over time, as more people adopt Bitcoin, the markets for Bitcoin deepen, volatility drops, and there will be sophisticated measures that cause volatility to drop. And most, I'll say many, commentators are judging Bitcoin based on current volatility. I got a huge number of tweets a couple of weeks ago when I said that judging Bitcoin based on volatility now is like judging an 8-year-old's ability to play basketball based on her height right now.
Or the price of oil right when industrialization was happening.
Or internet speeds when internet first came out.
And it's not just volatility. I think Bitcoin is being judged as a monetary phenomenon. And yes, perhaps we can someday talk about what monetary implications Bitcoin poses, but it's 10 billion. It is nowhere near that discussion is here. What we should be discussing is Bitcoin as a payment system, Bitcoin as a money transmitter, Bitcoin as a remittance business.
Okay, so we're now going to take some questions from the audience. You get extra points from me.
We've really wrecked the first panel.
You get extra points from me if you say the thing that you bought with Bitcoin before your question. And I think we have a mic up here. Anybody who bought stuff with Bitcoin? How about right there?
Joe Colangelo, Consumers Research. What's the biggest challenge for Bitcoin in 2015? And I buy every meal with Bitcoin. Usually through gift or restaurants that accept Bitcoin.
In 2015?
Yes, so 2014 goes great. We've got lot more Bitcoin investors? Is it going to be legal challenges, the threatening of the state, or is it going to be the income disparity between early adopters? And like what is a really big problem that you could see Bitcoin causing that will need human intervention to fix it, that Bitcoin, the protocol, will not solve by itself?
So I'll take a run at it. Because Bitcoin's a worldwide protocol, I don't think it has a centralized problem in 2015. Its advantages and its disadvantages vary with region, with the technological infrastructure, with the legal environment, et cetera, et cetera. I'm a little bit of a U.S. partisan, being an American myself, and I see Bitcoin lagging quite badly, the development of the industry in the U.S., continuing to lag in the United States versus other parts of the world. Now that's good for other parts of the world because I think that their consumers who probably need Bitcoin more are better off with the overseas development. But it's also a loss to the United States for the U.S. not to be leading the way, because we do have a lot of bright minds who can build really incredible stuff. They're running into regulatory regimes that are too complicated and frankly dangerous to them, and that's really unfortunate. It's causing a sort of an anemic Bitcoin use in the U.S., and that'll continue well into 2015 and beyond.
Can I be provocative
Yeah.
and say so what would be a threat to Bitcoin in 2015? I think it would be if we saw a Mumbai type attack with machine guns that were bought on a black market site using Bitcoin. And then Mr. Lawsky, who wants to make New York sort of the place where you can come and start up a Bitcoin business, is just politically hampered in a way where he can't do that, even though he wants, even though he understands that you could have bought that machine gun with any other kind of payment system. He can't do that. So I think that would be the threat. And so I think maybe we should start taking a deep breath and thinking through that Bitcoin is cash, and it's not unlike any other kind of cash.
All the way in the back.
Hello, this is Michaela Trigilio with Treliant Risk Advisors. I kind of wanted to go back to the volatility question. If we consider Bitcoin as a payments transfer system, we've talked a lot about how it compares to, say, the US dollar. How does Bitcoin compare to some other emerging payment transfer systems, either on the mobile front or using alternate protocols? And do you foresee any sort of competitive advantage that Bitcoin has aside from just having first mover advantage? Thank you.
I see the advantage of it being, again, a worldwide protocol. So I don't know the numbers. I saw on an unreliable website some months back that the U.S. might provide a quarter of the base money in the world. The euro, another quarter. Then you've got the Japanese yen, the renminbi, and a long tail of other forms of money. Mm-hmm. The U.S. can, rather Bitcoin can get as deep as some of the major currencies in the world in terms of trading without bumping off any currency. It could just be used by people all over the world. Some may hold 5% of their assets in Bitcoin, and you've already got a widely held, deeply traded currency that doesn't topple any major currency. I think that's
And actually, in terms of how it compares to other emerging payment companies, the value of Bitcoin, again, it fluctuates over time, but the value of Bitcoin actually has exceeded that of Zoom, of Avios, Western Union, and it is, fast reaching that of PayPal. And I believe PayPal today was eclipsed by Alipay in China. So how it compares to, the fact of there are some metrics on this. I would recommend Coinometrics or Bitcoin Pulse for some of the metrics on how the industry has been growing and how user adoption has been growing, but it's the adoption is actually quite rapid and probably contrary to the single news stories that you sometimes hear. In terms of how it compares to other currencies, Bitcoin has been climbing the M1 charts of many of some of the smaller currencies, and you actually have a couple of countries now in developing countries experimenting with integrating, replacing their fiat currencies with digital currencies. Of course, that's not feasible in the developing world and not necessarily something we'd want at this point. But I think that the reason why there are only a few global reserve currencies is because a currency is only as useful as it is adopted, as wide as its network is. So the promise of Bitcoin is that it can be a universal payment rail. And right now it can act as a bridge between traditional financial institutions, as entry points between the legacy system and this Bitcoin world. And eventually, if you have whole companies now experimenting with paying their employees in Bitcoin, taking care of their supply chain in Bitcoin, paying their lease in Bitcoin. So, I think that if there are only a few reserve currencies because there are only a few that are widely adopted enough. And, certainly Bitcoin has the potential to become a payment rail that is just as useful as any other global transfer network.
Interesting stat. I think it's over the past 500 years, the average life of a fiat currency is 27 years. So again, in history, the average life of a currency is 27 years. And so if you live outside of the US, you live outside of the UK, and you whether you own now the Thai baht or you own the Argentine peso, you have experience owning a currency that gets basically debased, and that's history. And history shows 27 years the paper you hold will be worthless.
I'll say, with all due respect to our friends at the Fed, in some respects, I'll take the volatility of Bitcoin over the consistent decline in value of the dollar.
Here, next to the camera.
Should I ask a
Is
question?
there,
Oh, there's a gun in the back.
I already had the microphone, but I'm happy to pass it.
did you seize it by force?
thought
Go
she-
ahead.
I thought she
Go
sat
ahead.
next to me. I just wanted to say
Clearly
what a
we're
great panel
rewarding
this was. Really
initiative.
enjoyed this panel. So I've only spent Bitcoin in giving away Bitcoin to charity. For some reason, like they're nonprofits that accept Bitcoin. I've never had the need to buy anything with Bitcoin yet. And I was sitting here thinking, PayPal sort of piggybacked off of eBay, and it was sort of the best way to buy things on eBay. And Stripe sort of piggybacked on startups, et cetera. I'm sort of wondering, is there, when would I rather use Bitcoin than cash now? Is there sort of a marketplace or a product or a transaction that's really, where Bitcoin now is just preferable versus the positive feeling you get from using Bitcoin?
I think you should stay for the next panel, but maybe some.
So, at the risk of giving Bitcoin a more reputational risk, as the bankers like to say, it's a funny thing you bring up. PayPal. PayPal actually was at first bootstrapped before eBay. eBay was concerned about PayPal because PayPal was associated with pornography. And PayPal was used to buy porn. And today, porn.com gets 20% of its revenue from Bitcoin. So I think who are the first people to jump in to a new technology? It's going to be some of the seedier folks, but they bootstrap it and then it expands.
So this will be controversial, and nobody loves that. I think that as marijuana becomes legal in the U.S., that's going to be probably the killer app that takes Bitcoin to kind of higher acceptance. And the reason why is, from what I've been reading, legal dispensaries, they're just not willing to take credit cards, and having a bunch of cash and lugging around cash is probably not a great idea.
I want to applaud you for the use of higher acceptance rates.
There's another adoption path that may come a little bit later. I think my colleagues are right that some of those edge cases where marijuana dispensaries are kind of forced to take the safest money they can, and credit cards are perhaps required to effectuate national policy, federal policy, which is not looking favorably on marijuana. But I think large adoption might follow among retailers. They'll pull Bitcoin use because of the high cost of accepting credit cards right now. And retail, I don't know what the margins are, 2%, 3% are their profit margins. And they're also paying 2% or 3% for payment services. And if they can get their payment services costs down to 1%, they might be nearly doubling their profits. And so you might see retailers working very hard, again, after the way is paved by some of the seedier uses of Bitcoin, working very hard to get people to use Bitcoin to make their payments. they'll have a struggle with the credit card companies, of course, in a variety of ways. They want to do that.
And if you listen to Overstock's testimony during the DFS hearings, they operate on very slim profit margins, and reducing their payments, taking a credit card payment takes 3 to 4% for the average merchant. Reducing that down to 0 or 1%, you can integrate BitPay or Coinbase and not have volatility risk, not have currency risk. Reduce that 3% down to 1% in one go. It's infinitely attractive for merchants. So I think Overstock is a clear proof of concept here, and you're going to see Tiger Direct is now stepping in. You have Shopify's been there now for a while, and you're having hundreds of thousands of merchants now getting onboarded through these platforms. And I think that the other use case, I think, which is really important and takes a bit of imagination, is the remittance world. I mean, it's a $600 billion market. It's incredibly inefficient and unjust. And so, to be able, in the poorest corridors, they charge 25% for the hundreds of dollars sent home, and that represents in those developing countries up to 40% of their GDP. Now, the World Bank and other global organizations have been very focused on this idea of global financial inclusion, and even NGOs that send money, they're very concerned with making sure that money reaches the constituencies and not corrupt governments. And so Bitcoin solves a lot of these problems. It's still very early, it's still being used, but you're going to have billions of people coming online in the developing world now in the next decade. Smartphone penetration is very strong. You're going to see Wi-Fi now entering these markets. And it's impossible to put a brick and mortar bank into every corner of the world at this point. So how are these new members of the global financial community going to interact in global commerce? And they're going to do it on their phones. They're going to do it on the internet. And a protocol that allows you to send payments securely at low to zero costs it just makes sense. And I think that proof of concept will be, I think, a very big step forward for these new payment technologies.
Jerry wants to get in here, but I'm actually going to use my moderator's privilege / tyranny and ask the final question, which I think will be on the same point you wanted to jump in, which is what is the and we've touched on this a little bit, what is the entrenched interest that's going to be the enemy of Bitcoin? Tell me who is going to make the play in Washington or whatever sort of stage that this is fought to slow down adoption of Bitcoin because it threatens their interests.
I can just to speak anecdotally to that. I can say that a year ago we were turned down for bank accounts for our businesses, many banks, and yet even after being turned down, some of these banks would still call me, every other week, every month to see how we're doing. And banks don't want to be first, but they certainly don't want to be last. And you're seeing a huge evolution in a paradigm shift in legacy system, in the incumbents and in the traditional banking services, seeing that that this is really here to stay, and they need to figure out how to integrate that into their systems. So, I hope that answers some of your questions.
Yeah, I mean, I'm going to use the opportunity to give a shout out to John and Jennifer and Ben. I mean, these really are the three thought leaders in public policy and on the legislative side and regulatory side. They're taking an incredibly thoughtful, balanced approach to kind of looking at the issue. And they've every conversation I've had with them in their offices has been it's been very thoughtful and very balanced. And I'm hopeful that as they have gotten up to speed and kind of seen the potential, they will help kind of share that knowledge with other people around them. And so I don't think government's the bad guy. And I spent a lot of time with the banks. And my experience has been recently, every single major bank has got a team focused internally on figuring out what is their Bitcoin strategy, and for none of them, it's nothing. I mean, they all are trying to come up with what's the play here. So it's hard to even answer the question because maybe there's going to be some conflict between different alternative currency factions. I mean, you see a little bit of that, and it might be kind of the privacy folks, kind of more of the hardcore libertarian anarchists who are kind of trying to preserve kind of the anonymity and privacy elements of cryptocurrency versus kind of more mainstream. And ultimately, I think I respect the opinion, but I think they'll lose.
I'm, I think, a little sanguine, maybe naively so, about this actually. I think the folks who are just directly threatened are going to be the money transmitters, right? So the Western unions, the remittance companies of the world. And the point I wanted to make earlier is it's really remarkable how broken that system is. I recently learned that the average amount that it costs to send a global remittance is 8.5%. And between certain countries, it can be 20% of the amount sent, which is just insane. And it'll take a couple days to clear. So money transmitters, I think, are the most clearly threatened, but I think they're probably smart enough to adopt and embrace the system. Then you have credit cards, and I don't think that credit cards feel threatened by Bitcoin because they're in the business of lending money to you, right? They allow you to spend money you don't have. Bitcoin is not that. And we get something for the 3-4% that they're charging merchants. We get protection insurance, we get frequent flyer miles. So that's not something Bitcoin competes, they don't compete on that margin. So I'm a little sanguine at this point.
Well covered.
All right. Thank you, everyone. Sex, drugs, and rock and roll.